What's up, everybody? Welcome back to the Seven Figure Flipping Podcast. This is Bill Allen. The market has been interesting lately. It's everything's going over asking price. We had a post in the Seven Figure Altitude group saying somebody's house sold for like $30,000, $40,000 over asking or over list price, and everybody's seeing it. So they're wondering what's happening with the market. I was wondering too. So I scheduled a call with my buddy Terry Berger. He's been doing some YouTube videos on his channel lately, and if you haven't checked it out, check it out. But we were just talking, me and him, and I asked him if I could record it. And then afterwards I said, hey, can I use this to put on the podcast? So I thought it'd be cool to just throw this conversation up with me and him. There's a little bit of just kind of back and forth in the beginning and joking around and stuff like that of just me and him talking. But I think it'll be interesting for some of you to be a fly on the wall, to understand, get in the mind of a house flipper and wholesaler and see kind of what they think's going on with the market. So Terry has been in real estate for a long time. If you guys came to Flip Hacking Live last year, you know who he is. He talked about hiring last year. He's spoken at multiple events of ours, and he's at the end. I got him tagged for talking about the market in October at Flip Hacking Live. So if you don't have your ticket, make sure you go get your ticket right now. You go to fliphackinglive.com and grab it. So here's just a conversation with me and my buddy Terry Berger. And we're talking about the market, what we think is going to happen, what he thinks is going to happen, some data. If you can see this on YouTube, go check it out on our YouTube channel, because he shares a screen, he shares some charts and things like that. But if you're just listening in your car, you should be able to get very similar things out of it. So, all right, I'll leave it to a fly on the wall. You guys will be a fly on the wall with the conversation with me and my buddy Terry.
Well, I don't know, man. You know, everybody says the market is great, right? It feels a little superheated and inflated. You know, in my research, again, I look at a lot of places. I look at Redfin, I look at Black Knight, I look at a lot of the data that a lot of other people look at, but I just try to figure it out. And then I'm big on the human feeling side. Like, what does it feel like out there? And so it's just really chaotic. I know in Atlanta, a lot of the houses have a dozen offers. You know, list price is just a suggested asking price. They're all going over ask. In Greenville, our other market, same kind of deal, is they're just, everything's going above asking price. So it makes it really hard when, you know, I tend to be a fairly conservative investor. So when we're making ARVs, it's like, do you look at comps that are selling in, you know, last couple of months and think it's going to continue to be that way? Or do you try to be a more conservative approach and maybe look at last year?
Well, are you guys like building in and making offers the same way that you did before? Or are you looking at like stuff that sold in the last month or two because let me read you the post that kind of spawned this conversation that just happened. So it was like an hour ago inside of our Altitude group, and I'm not going to mention who it was just in case they don't want to, but somebody said they bought a mold infested home with a failed septic system about half block from the lake. Purchase price was $30,000, put $100,000 into the rehab category, into the rehab. Everything's new. Target sales price was $210, maybe $220 if we did a really nice rehab. And he started this, by the way, with this falls in the holy you know what category. So I was reading this thinking it's going to be this like horrible post of like, we found all these problems. And so bought it for 30, put 100 into it. They thought the ARV was going to be 210 to 220, which is pretty awesome. Like 130 into it, 210, 220, that's a good deal. Ended up listing it for 265 because a slightly larger home sold for 310, 4 blocks away. This morning, we accepted an offer for 285. It was one of 4 offers between 280 and 285. I'm obviously happy with the return, but I'm also a little bit concerned, to be honest. This market is so overheated. It feels like we're bouncing on the bubble like a trampoline waiting for it to pop. So how's everybody handling the current climate? Are you taking any precautions, changing any metrics? What are you doing? So I guess I'll ask you the same question. So a lot of people posted down here with answers like of very specific numbers of things going $30,000, $40,000, $50,000 over even asking price, which was even higher than they were planning on listing. So it's really good for flippers that have inventory right now, right, that are coming on the market right now, and really low inventory out there and really high demand. I mean, people are buying houses, wanting to move, things like that. And it's definitely opening up more in Tennessee of people like showings, neighborhood, people are out walking, all this stuff, the weather's getting really nice. So what do you guys, how do you answer that? What are you guys doing for Like how you're handling the current climate, taking any precautions and changing metrics?
Well, we are not going to use comps from the past 6 months as comps to run our ARV numbers. We're going to use comps from 2019, 2018, kind of a blended area. Because I honestly feel like the last time the market tanked, right, it happened immediately. Like it was the stock market crashed, everything crashed at the same time. I think if there's another housing crash or crisis, even just call it a crisis, it's going to look a little bit different. And I think it's going to feel a little bit different. My gut instinct tells me that rates going to maybe 4.5 or 5% could cause a inventory to stack on top of itself a little bit more. So we're just really approaching it very conservatively. We're going back to 2019, 2018 comps, and we're looking to see if there's an opportunity there. If we have a really great current condition comp that we can use as a wholesale, to me, wholesaling is the flipper's dream right now, honestly. Like we this is a true story. Went to this up and coming area in Greenville, and we bought a house for $50K. We demoed it. I walked through it with our project manager, and I'm looking at it going, we bought this wrong. Literally bought it wrong. Paid $50K for it. Looked like we're going to have to put about 60 in it, and the house is only going to be worth about 140, 150 maybe, based on the comps that we had at the time. And so I said, let's forget it. It's all cleaned out. Let's put it on the MLS and let's see what we can do. Put it on the MLS. We got that thing under contract as is for $110,000. So the person that's buying it is an all cash buyer. They're buying 2 houses to hold. It's in this area of Greenville. It's up and coming. So they're basically, paying a little bit more now to get something they think is going to appreciate really high in the future. They're probably right. That area is going to get hot. But we made more money selling that house than we would have had we flipped it. It's insane. Yeah. How do you explain some of those things? Like that post right there. How many more houses are there available at 10, 15, 20, 30% over asking price? And I think that's where we have to watch these interest rates, Bill, is, for every 1%, the interest rates go up, right? It impacts affordability by 11%. So 1%, so at 3%, you can buy a $400,000 house, but at 4%, you can only buy basically a $355,000 house.
With the same payment, you mean?
Same payment, correct.
Yeah.
But that's all you can afford, right? Like if your income only allows you to buy that $400K and you have to, rates go up to 4, now all of a sudden that loan officer says you can only buy up to 355 unless you're going to bring more money to the table or whatever else, right? And then all of a sudden, enough of that starts to stack on each other. It starts to take out higher price points. And I really think that's kind of where we need to watch it, is what's happening in the higher price points, and how is that starting to trickle down? Because the stuff that we do is mostly first time, second time home buyer. We don't play around in the upper price points very much. But I'll tell you what's interesting, man.
Those buyers, before you move on, those buyers are, so they're getting approved because the interest rates are so low, they're getting approved for more money. And when the interest rates go up, that buyer pool changes. So those people aren't able to pay as much for a house. So that demand starts dropping as those interest rates go up. But what about the inventory? Like this fact that it's still very low inventory. Do you think that more people are going to be putting their houses on the market in May, June, and summer months like they always do? Like we missed a summer selling season in 2020. Do you feel like it's going to be significantly higher this year?
Yeah, I do. I think we're making up for lost time that we lost in March, April, and May. And that's why you're seeing these record months. Literally record sales that eclipse any peak, right? I don't know. I've got this chart on Redfin that I like to use. It's the new listings, and they've got a lot of cool charts, but there's always this real estate heartbeat, I didn't even have it on my
Can you share it?
But there's this real estate heartbeat, right? And it looks like this. You see it? It kind of goes up and down like that. It's a natural rhythm. And there's always you want me to share my screen?
Yeah, share it.
There's always one peak in the market. every year. It's usually June. Like, so these are, let me just go over to pending sales real fast.
So where is this? It's on Redfin?
This is on Redfin. Yeah, it's redfin.com/news/data-center.
Do you have 3,200 unread emails, Terry?
Oh my gosh, are you seeing that? I do.
All right.
That's hilarious. I'm terrible about my inbox, but anyway, if you guys look, like you can see here, there's always a peak of pending sales, right? And that peak is usually sometime in May or June. So that's typically the big, I call it the real estate heartbeat. You know, you can kind of see it going back from 2012. It's just building, right? The heartbeat's getting bigger because there's been more demand for housing. But what's crazy is if you look at these
pending sales each month of the year, or like couple months each quarter.
Each month of the year going back to 2012.
Oh,
yeah,
that's the number of houses sold. Okay.
They're pending. They go pending,
okay.
Right? So those are houses that, they haven't sold yet, but they go under contract. They're going to sell, right? But if you look at the pending sales, like just take, you look at your peaks here in 17, 18, and 19, there's always a winner. And then there's a second place, third place. Well, I mean, what's amazing is you've got 4-5 months in a row of sales going back from July to October of 2020 that eclipse every peak in the last 9 years. And then if you want to just get a little more granular and you say, okay, well, what about February? February, it's 451,000 homes sold last month. Well, last year before the pandemic in February, only 380,000 houses sold. So we're still seeing these huge inflated numbers. But where I think we have to watch, I mean, this is just me and you talking here. I mean, I know we're recording, but this is the one, to me, the one that's really, really interesting. And I can't really get my mind around it yet. Let's see if this will populate. Sometimes this site takes a little while. But is the number of new listings that's coming on the market.
Yeah. So when you're looking at those pending sales,
there we go.
Like how do we? Okay, you got the new listings up now. Like, well, this will be interesting. This is where my question goes, because you've got pending listings, but they're going up, but you don't have new listings backing it up. So, this will be interesting to see.
So what I noticed and doing some research was that in November of 2020, we had almost 500,000 houses go on the market, right? But if you go back, and typically November, December, we would all agree that's the bottom of the heartbeat every year, right? You got Thanksgiving, Christmas, New Year's Eve, all the holidays, right? So, but 491,000 houses went on the market in November, brand new listings. But the year before that, only 441,000. So that's a net increase of about 50,000 houses going on the market in November. And then check out December. December, typically, when nobody would list their houses for sale, and still in the middle of a pandemic, we had 390,000 new listings go up for sale. But before pandemic, 323,000, right? That's 2019. Go back 2018, you got 319 again. So you have this like big increase of about 70,000 houses coming on the market that would have been higher amount of new listings piling onto the market. Now, where my data breaks down and my analysis breaks down is January. Like January is a lot less houses coming on the market than January, say, where are we? 2019, 534 versus 486. So, that's where my data starts to break down. But I noticed these 2 months where we had a lot of this. And here's what I think, Bill. I honestly think that we're going to be looking at inventory starting to stack because people want a piece of this action. Like, think about it. Like, just common sense. Take all the data out of it. If you needed to sell 18 months ago, and then all of a sudden we're in the middle of a pandemic and you can't sell, there's a lot of people that need to sell right now, right? That haven't put their houses on the market. Well, when are they going to do it? And my opinion, as soon as somebody starts saying we're back to normal, or we're starting to say that, hey, we're feeling back to normal, then nobody in the White House even has to say back to normal. As long as we start feeling back to normal, we're going to see a bunch of inventory pile on.
Well, I guess so the interesting thing in those two numbers that I saw, pending sales and new sales. So you don't really, and what everybody's talking about is that there's no inventory, right? There's no houses on the market, but you just showed that more houses are coming on the market these months than there were last year. And
Right.
but the reason we're not seeing that is because more sales are happening. Like more people are
Yes.
buying, there's people lining up, right? The demand is higher than the supply still. So,
Yep. Still.
so I guess the catalyst becomes, when does the demand start dropping? When does the supply start outpacing the demand? And that's where the tipping point starts going in the other direction. Could be interest rates, could be lots of different things. And it could be some of the forbearance stuff that we've seen that's piling up. But I've seen things all the way from that. That's why I personally am not sure that this is going to happen really fast. Like,
Right.
I think that we will be able to watch it a lot different than we could before. And there wasn't even like really a huge falling knife. We just wouldn't believe it. And I think people are a little
Mm.
bit more like this post probably would not have happened. Like people going, I think this is feeling a little overheated, right? It wouldn't have happened back in 2008, 2007, 8, 9, something like that. Because people are just like, I'm just going to keep, everybody would go, what are you talking about? What's wrong with you? Just go get more houses, make more money. Like there's no problem here. And I think the fact that we have a pretty short memory, but not that short now, because a lot of people are still in the game that got hurt, that are still feeling the pain from that time. So that's why I wonder if it's not going to happen really, really fast. And it may be the fact that there's actually people looking at it. And I think the smart folks, like the folks inside this mastermind group that are asking these questions, are saying some of the answers were, here's what we're doing. We're running our numbers based on not the current sales, but comps from before all this stuff happened. Like when people were kind of freaking out, we're running comps like that. We're missing out on some opportunities, but we're also making huge paydays. Some of the folks we're talking about, they're stacking cash away so that if anything does change, then they have the money available for that. And then just kind of waiting and seeing. Like I don't know if the interesting thing is like I was always, even when I invest in the stock market, people always say, don't time the stock market, just invest, right? And so I think we just have to be careful, look at the numbers, and I'll enjoy the fruits right now, and just know that it's not always going to be like this. Like really take advantage of it right now. But if you run your numbers like they did, right? They were all in on that house, $130,000. So even if they're 220 number and they wanted 220, got 285. So even if they get 200, they're very safe in a property that they only had $130,000 into. So I think that's where we lose it sometimes, and we can get in trouble, is when we push the numbers and become aggressive, and I'll tell you where it usually comes from, and I've been there. It comes from this idea of like, I have to have a certain number of properties going on at this time, or I was doing 5, I want to be doing 10 all the time now. And you're growing through some really dangerous times like that by overpaying to compete and outbid other people. So I've heard people say, I bought this property and there's no profit in it, but I want to keep my guys working. And this is probably not the time to do that. I don't think. We're definitely not. And so I think it's the time to say, well, I'm not going to buy that property. And if I have to have a little bit less work for the folks, then so be it, and just be safe. So that's probably my take on it, I think. And I don't know if I'm as conservative as you are with running numbers from 2 years ago or a year and a half ago or something like that. But because I don't particularly think, and I may be way off, we can look back on this call in the future. I just don't think it's really going to like spike down. And I don't think we hold these properties too long. Like if I was a new construction builder, then I'd probably be looking at things a little bit differently, look at longer term holds. But I think we should be in and out of these properties in like 3 months. And if I have enough margin there, like if I make a little bit more, make an extra $20,000, that's great. But if there's a $20,000 dip, I'm safe too. Because I mean, the likelihood of us, I don't know what you think a month over month drop would be if it did happen and we started seeing some cool off. A couple % a month, I would think it would be like the max. Like even back, I mean, the expensive houses are. I saw a house here in Nashville that sold for like $385. Then in 2018, then 490 in the end of 2019, just over 1.1 million.
Holy cow.
February of 2021. I was like, holy crap, this thing went up $600,000 in 2.5 years. I mean, it was insane. And there's probably some work that had been done in there, but it was shocking to me. So I don't think we're going to drop 10% a month. So
no, and I do think you're right though. Like we'll be able to see this coming. And when you only have 2 weeks worth of inventory on the market, you know, in most markets, most good markets, you're gonna be able to almost see the storm winds, you know, way out in the distance before they get to you. I mean, and remember, like 6 months of inventory is typically what the National Association of Realtors says is a balanced market. Now, that doesn't mean what that means. 6 months of inventory. When I was a realtor, right back in the day, 6 months of inventory, that didn't mean the houses didn't sell in 2 weeks still, right? The nicest houses always sold fast and always will sell fast. It meant that you could buy deals on the MLS because the ones that had been sitting there 6 months, that seller was finally motivated to take a much lower price. I think from an investor's perspective, a little bit of a slowdown means we can maybe step off the gas on the marketing a little bit and buy more deals on the MLS. But you're right. I mean, I don't know. What do you think? I think it's going to be another 12 months before we're even worried about the storm.
Yeah.
If there's a storm.
Yeah, I think a lot will be, it'll be interesting to see what happens when the government stops printing money and giving it away.
Mm-hmm.
I mean, there has been ends of that in sight, and then it just keeps ticking down further and further and further. So I think that's probably a lot of what's holding some of this stuff up personally. And so when that starts slowing down, and because like we're hiring for positions right now, and I'm having trouble getting people to even like want. Here's my thoughts on that. We have these admin folks that we're trying to hire. We're trying to hire somebody for our membership department. So inside of our Facebook groups and emails and stuff like that, and taking care of our members. We're trying to hire a videographer, like an assistant videographer. We're trying to hire a COO, which is a totally different story. That ad will go up soon. But we're trying to hire a couple of the $35,000 to $45,000 pay range, and I think those folks just don't want to come off unemployment, or like almost like the government is incentivizing people not to work right now. So we don't have great applicants. The applicants that we do have they're just not showing up for interviews, stuff like that, like blowing us. It's really wild to see what's happening. But when we were in the pandemic, we were hiring. It was like all these people had been laid off, right? And people were just like everywhere. So when I see that change, I see people are working or choosing not to work because of some of this stuff. And a lot of it is the fact that they're actually incentivized not to work right now with unemployment benefits and things like that. And so we're not seeing a great opportunity internally to allow us to bring in great people. And a lot of that is the subsidizing that's happening. So that flows through to the mortgages, to rental stuff. Like we can't kick some of the people out of some of our rental, like our apartment buildings and things. And so once that starts slowing down and stopping, I think we start realizing what's actually happening and the actual pain that some of the people are in. And then I still remember Bruce Norris when him and I did that podcast together. He said, he was like the sales that like the distress sales are going to drive a lot of this.
Mm-hmm.
And they typically drive a market drop and decrease. So that was interesting to me, like the foreclosures and things like that. That's why I'd always been watching that a little bit closer than the data you just pulled up. But I mean, the low inventory, high demand, as long as that continues, I think we watch the inventory. I think we watch some of the distress sales. I think we watch what's happening with people. Like the people just don't seem to be really affected. The majority of people, there are definitely pockets of people that seem to be affected pretty heavily, but I don't know. It's interesting. 12 months sounds about right. I think by the time we do Flip Hacking Live in October, I thought last year in October, we were going to have a better idea, like have this uncertainty and fog, like this cloud that we were in. And the certainty has happened. We are certain that we're making a lot more money over the last year, but we're definitely just kind of like, I don't know, the clock's ticking down to some point. So
Well,
If you
and
say, if you think it'll be like 12 months, I say that's probably right. I think this winter season, like the same data that you just showed, right? That winter, like the summer months, the summer selling season, and then what happens in the winter would be really good comparison to what you have. And if you can look at that data month over month, like they have February in there, they obviously are updating that every month or so, which is pretty amazing. So I'd say most people should be watching that.
We had a call this morning and we're just talking through like how long can people live in their house for free, right? And I mean, if you file for forbearance, 12, 18 months, and then if it, and then and if people are going to go through the foreclosure process, which I don't believe they will, I think we won't see all the foreclosures. I think you're right. We will see distressed sales, but they're going to be distressed sales like I'm breaking open the piggy bank. Because remember back in 2009 when it all went down, the values crashed and people were left underwater. Certainly people have been in their houses 10 or more years. They've got a piggy bank of equity, hopefully, right? And they're going to want to, if they want to survive or they want to move and they want to rent or whatever, that instead of going into foreclosure, they're going to break that piggy bank. They're calling a realtor, they're calling somebody, an investor. And I feel like that's when our opportunities come, when the folks that can't work out a forbearance plan, and my gosh, the government is allowing them to work out forbearance plans. I mean, refinance at a much lower rate, all kinds of cool stuff that the government's trying to do to keep people in their houses. But the people that cannot stay and can't pay, then those people will have to sell. And just don't know how many of those people there are going to be.
Well,
right now they get to live for free.
Well, I was going to say, those should be the people that, if they can find a cheaper house or a place that they can move that's cheaper. So you actually have to leave. Probably the reason those people aren't throwing their house in the market to take all the equity they could potentially have right now, which is significantly more than they might have in a few years, right? Is they have to move somewhere else at cheaper cost of living to buy a house now in the same market. So I was talking to people in my neighborhood right now. Just had a family move in 2 doors down, had a family move in next door. People are putting their house on the market. And it's interesting when talking to them, they're just like, look, we're going to live here for a long time. We didn't really care about paying a little bit more because we're going to live here for 20, 30 more years. That's the goal and the plan. But the people that are thinking about selling, I talked to them and they were like, well, we could sell our house and make a lot of money, but we can't buy another one. I was like, well, the only way that you can do that is you have to go to a cheaper cost of living. I know people that live in California that are moving to Nashville and they sell a $1.5 million house and they move into a $600,000 house. And it with more land, bigger property, all that stuff, and they love it. And no state tax. So it makes sense. But when you move from an area, you have to kind of go to a less, I don't know if it's less desirable, but it's just a cheaper area. So most people probably don't want to leave their school systems, their kids, like the community that they're in, all that stuff, or else they'd list their houses today, right? So
I'd say where I think there's an unexplored opportunity for investors is probate. I mean, the probate courts have been shut down or they're working virtually. And depending, we're in the Southeast, so we had a little bit more freedom than our friends up in the Midwest and the Northeast. But you think about all the people that, not COVID deaths. I mean, they're in there, but all the people that have died in the past year. I mean, those estates, many of them have yet to be settled out and houses put on the markets because the probate courts, all the courts have really been shut down. I mean, I'm involved in a lawsuit. And it's like, guys like, yeah, you're not gonna have to show up until 2022. I mean, that was 6 months ago. And so that's a whole other opportunity that I see for us, is trying to figure out this, where this hidden inventory is that really nobody knows about.
Yeah, it's probably eviction courts and stuff like that too.
Yeah.
Because that's kind of what we're targeting, the apartment stuff, is who isn't running their community well and hasn't had people paying for a long time and needs to stuff like that. The poor leases. I'm battling a flood and an insurance case right now. Homeowners insurance and flood insurance down in that hurricane down in Pensacola on the house that I told you about, where I got sued and bought it back. So that thing, I was a week away from closing on that thing, and hurricane hit it, and that's been crazy. So, all right, man, I got to go to a call right now. But hey, I think when we hit October at Flip Hacking Live, this is probably a really good topic to dive into, depending on where we are. So keep studying this stuff and I'm probably going to tap you to talk about this at the event.
Yeah, dude, I think people are going to need Flip Hacking Live more than ever. Think October, 4 months, 5 months, 6 months away, whatever it is, I guess 6 months. And the market could be completely different than it is right now.
Yeah, I mean, we just had a meeting about it, and we were actually gonna increase the price of tickets this week, but I was like, don't do that. Nobody's thinking 6 months out in advance right now. Let's wait a little while to change the ticket pricing until people aren't even figuring out their summer. And we want to go back in person. We want to do all this stuff. Like, it's a perfect time to. I think this year is going to be, and we're back in person. Hopefully, we have a good understanding. Like, we're learning so much right now through the summer. We'll get that data, and I don't know. I'll have you talk about this stuff. I think so. Last year talked about hiring. This year you can talk about your your bold market predictions. So.
Yeah, bold.
All right, man. I gotta go.
All right, buddy. Have a good one.
I love you. Thanks for talking.
Love you too. See you in a couple weeks.
So we just keep buying, use old numbers, and watch that data that you sent me. So
yeah, and wholesale. I mean, if you get a deal that looks like, if you can take a deal down, you should put it on the MLS. We had a guy, last story real quick. We thought we killed it on this house, and we bought it for 18, sold it for 40. The guy cleaned it out, got rid of the tenant, put it on the MLS, and sold it for 80. That was our meeting this morning. I was so mad.
Dude, that happened to me when I just got to Nashville. We wholetailed a deal. We bought it. Oh, no, we wholesaled it. So we wholesaled it. We assigned it to somebody. We made like $45,000. We were like jumping for joy. The dude doesn't even clean it out, does nothing, puts it on the MLS, and makes like another 60. And I was like, we have money. We could have just bought this thing.
Yes.
Market well enough, And that was a huge lesson learned in kicking the pants to figure out the market and be a lot smarter.
Our pain point was the tenant. We didn't want to have to get rid of the tenant. And I'm like, okay, for $40,000, we would have gone through the process. He probably just paid her to leave.
Yep. Probably paid her like $1,000 or something. So
yeah, that's just.
Yeah. Anyway. Lesson learned, man. We're doing a little bit less deals right now and just being a lot smarter. And so we might just start having to take them down and put them up on the MLS if they can get loans and stuff for them in the short term. So yeah, good advice. All right, man.
Go, buddy. Have a good one. See you.
See you in a couple of weeks in Cancun.
Looking forward to it.
Yeah. 10 days, man?
Yeah, I'm psyched.